Good morning and namaskar. Today, now we will see the results of IT bellwether Infosys. It is second only to TCS. In fact, at one time, Infosys was equal to or even better than TCS, but TCS has overtaken Infosys quite some time ago. Now, first let us take a look at the results, and then we'll go to the other details. Net sales are 23,665 crores in Q4 of this year. 23,665 crores. Now, previous quarter 23,267 crores. Slightly lower, 1.7% lower, quarter on quarter. That is, previous quarter was lower. Now, current quarter is higher by 1.7%. Now, in Q4 of last year, 21,803 crores. Therefore, year-on-year growth is 8.54%. So, net sales have grown by 8.54% year-on-year and 1.7% quarter-on-quarter. Now, final net profit, I am not going to the normal net profit, after minority stake, etc., final net profit is 4,233 crores. That is slightly lower compared to the previous quarter of 4,321 crores, minus 2% lower. Now, compared to Q4 of last year, that is 3,798 crores in Q4 of last year, current quarter 4,233 crores is 11.45% higher. So, 11.45% higher net profit, final net profit. And minus 2.04% lower quarter on quarter. Equity share capital is high at 2,122 crores. Reserves are 63,328 crores. Basic EPS is 9.98 compared to 10.19 in previous quarter and 8.83 in the Q4 of last year. So 13% higher year on year, 2% lower quarter on quarter. Now, market price is 911 now. Price earning is 20, based on the market price of 911 and basic EPS of 9.98 quarterly. The price earning works out to 22.8. Not bad. 52-week, not very high, but not very low. 52-week low is 511, 52-week high is 952. Current price is 911. It is slightly closer to the 52-week high. The price is holding. Infosys has got a big attraction for most people. But net profit has declined in the current quarter. We'll have to watch and see how it will work out in the next quarter. Next quarter also is COVID affected, we need to remember. Now, valuations. If you look at market cap, 3,87,979 crores. 3,87,979 crores is the market cap. Price earning for the last year is 24.97. Book value 146. Dividend 350%. Industry price earning 21.75. So, Infosys is slightly better than that. EPS is 36.49 for the trailing 12 months. Price to book is 6.23. Price is higher, book value is lower. That is like that for most IT companies. They don't have much assets. Their main assets are their people. Dividend yield is 1.92%. Face value is 5 rupees. Now, if you compare how the prices moved in the last 3 years, see, before 3 years, the opening price was 500 and current price is around 900. So, percentage gain is 80%. So, if you are satisfied with an 80% gain in the next 3 years, you can go for Infosys. Now, shareholding pattern, if you look at that, promoters hold 13.17%. Pledge is 0. FIs hold almost 31%. So, FIs have got a lot of attraction for Infosys. Promoters have got hardly 13.17%. Management is headed by Nandan M. Nilekani, chairman. Then Salil Parekh is the Managing Director and CEO. UB Praveen Rao is the whole-time Director and Chief Operating Officer. Now, Salil Parekh says about the Q1 results, our Q1 results, especially growth, are a clear testimony to the relevance of our service offerings and deep understanding of clients' business priorities, which is resonating with them in these times. It also demonstrates the remarkable dedication of our employees and leadership during this period. Our confidence and visibility for the rest of the year is improving, driven by our Q1 performance and large deal wins. Actually, deal wins are quite impressive for most of our companies, even these COVID times. Infosys has got an impressive large deal wins. The revenues have grown year by year by 8.5%. Digital revenues have at $1,389 million. It constitutes 44.5% of the total revenues. Year-on-year growth of digital revenues is 25.5%. So we have seen Mindtree also digital revenues are higher. Operating margin is at 22.7%. There is an increase of 220 basis points. Free cash flows, 5,524 crores. Year-on-year growth is 63.5%. Voluntary attrition for IT services declined from 20.2% in Q1 of last year to 11.7%. From 20% to 11.7%. Quite impressive. So attrition has come down. FY21 revenue growth guidance is in the range of 0 to 2% in constant currency. So revenue growth is expected to be very low in FY21, but who knows, it may improve as the year goes. Operating margin FY21 is expected to be between 21% to 23%. So Praveen Rao says, during the last few months, we have taken multiple steps aimed at employee safety, well-being, etc. Clients have recognized us for the speed, security, and effectiveness. The strength and diversity of our portfolio was evident in good revenue performance, sizable large deal wins, high focus on operating metrics, and significant decline in attrition. Operating margin expanded to 22.7%, driven by preemptive deployment of our strategic cost levers, etc., says Nilanjan Roy, Chief Financial Officer. Collections were robust and CapEx was focused, which led to a 50% growth, 50% year-on-year increase in the free cash flows. Our liquid and debt-free balance sheet, please mark it. Infosys says it has got a lot of liquidity, but it is totally debt-free. So Infosys has been doing well in the last 3 years also. You have seen about 80% growth was there in the prices also. Now, if you are satisfied with an 80% price growth in 3 years, you can go for Infosys. Actually, most of these IT majors have clocked between 80 to 90% 3-year growth. So I wanted to tell it because you must know how the industry has been progressing in the last 3 years. Thank you for listening. Infosys is a good company. Mindtree is a good company. TCS has fallen slightly in the latest quarter. Wipro has done reasonably well. But TCS is expected to bounce back. It's a great company. All the 4 are great companies. So let us see some more great companies in the times to come. I'll be back with you. Thank you.